Topic 5 of the SCR program focuses on the rapidly evolving field of green and sustainable finance, emphasizing how financial markets support environmental sustainability and climate transition objectives. The topic explains that sustainable finance integrates environmental, social, and governance considerations into investment and financing decisions while promoting long-term economic resilience. Green and sustainable finance has become increasingly important as governments, investors, corporations, and regulators seek to mobilize capital toward climate-friendly projects and low-carbon economic development. The program provides candidates with a strong understanding of sustainable financial products, investment trends, disclosure requirements, and the role of financial institutions in addressing climate-related challenges. The topic begins by defining sustainable, green, and climate finance and explaining their applications within global financial systems. Sustainable finance refers broadly to investments that consider environmental and social impacts alongside financial performance. Green finance specifically targets projects that generate environmental benefits, such as renewable energy or pollution reduction initiatives. Climate finance focuses on supporting mitigation and adaptation efforts related to climate change. The SCR program highlights how these financing approaches contribute to sustainable economic growth while helping organizations manage climate risks, comply with evolving regulations, and align with international sustainability objectives and stakeholder expectations. A key area of focus in Topic 5 is the growth of sustainable finance markets and investment flows. The program examines global trends demonstrating increasing investor demand for sustainable assets, ESG-focused funds, and climate-related investment products. Governments and regulators are encouraging these developments through policy incentives, disclosure frameworks, and green taxonomies. The topic explains that financial institutions are increasingly integrating sustainability into lending, investment management, and capital allocation decisions. This growth reflects broader recognition that environmental and social risks can materially affect long-term financial performance, market stability, and corporate resilience across industries and economic sectors. Green bonds are one of the most important sustainable finance instruments covered in the topic. Green bonds are debt securities used to finance projects that generate positive environmental outcomes, including renewable energy, energy efficiency, sustainable transportation, and climate adaptation initiatives. The SCR program explains the green bond principles, which establish guidelines regarding transparency, project selection, management of proceeds, and reporting standards. Candidates also study social bonds and sustainable bonds, which support social development and combined environmental social objectives. These instruments play a critical role in directing capital toward projects that support sustainability and climate transition goals. The topic also examines green loans and sustainability-linked financing instruments. Green loans are provided specifically for environmentally beneficial projects, while sustainability-linked loans and bonds connect financing terms to the borrower's sustainability performance targets. The program explains the sustainability-linked loan principles and sustainability-linked bond principles, which encourage measurable environmental or social improvements through performance-based incentives. These instruments provide flexibility because proceeds can support general corporate purposes while still promoting sustainability objectives. Financial institutions increasingly use sustainability-linked financing to encourage corporate accountability, improve ESG performance, and align lending activities with long-term climate and sustainability strategies. Another important topic covered in Topic 5 is sustainable investment management and ESG integration. The SCR program explains how investors incorporate ESG and climate considerations into portfolio analysis, risk assessment, and investment decision-making processes. Investors evaluate factors such as carbon emissions, governance quality, labor practices, biodiversity impacts, and climate resilience when selecting assets or engaging with companies. The topic highlights that investors can influence corporate sustainability strategies through shareholder engagement, proxy voting, and capital allocation decisions. ESG integration has therefore become a major driver of corporate sustainability improvements and long-term investment risk management across financial markets. The SCR program also discusses sustainable finance taxonomies and regulatory developments shaping global markets. Green taxonomies establish standardized definitions for environmentally sustainable economic activities, helping investors and institutions identify credible green investments. The program highlights evolving regulatory trends requiring enhanced ESG disclosures, climate risk reporting, and sustainability transparency from corporations and financial institutions. These regulations aim to improve market integrity, reduce greenwashing risks, and strengthen investor confidence. Candidates learn that consistent disclosure standards and regulatory frameworks are essential for supporting efficient capital allocation and accelerating the transition toward a sustainable and low-carbon global economy. The topic concludes by emphasizing the strategic importance of green and sustainable finance within modern financial systems. Sustainable finance not only supports environmental and social objectives but also helps organizations manage emerging climate risks, attract responsible investment, and strengthen long-term resilience. Financial institutions play a critical role in mobilizing capital for decarbonization, sustainable infrastructure, and climate adaptation projects. By understanding sustainable financial instruments, ESG integration practices, market trends, and regulatory expectations, professionals can contribute to more resilient financial markets and support global sustainability goals. Topic 5 therefore establishes a strong foundation for integrating sustainability considerations into finance, investment, and risk management activities.